Hey folks, I want to address a lot of the recent FUD you may be seeing. FUD is fear, uncertainty, and doubt that you have been seeing on your FYP feed here and on any other social media platform when you look through crypto or the crypto world, right? All of a sudden it's, oh my God, Swift is working with Consensus and Linea and they're developing their own blockchain. That's it for Ripple. Well, you know, Ripple and XRP have been around, what, about 13, 14 years? I'd say that Swift is late to the game. They're late to the party. I mean, we're just a month or two away from clarity. They haven't overcome any of the hurdles that are clearly going to come their way. And not only that, I've heard this story before with Swift, with 2 or 3 other protocols, and they went nowhere. Like this one will go nowhere, because the truth is, it doesn't matter who Swift is working with. They're competing against the best blockchain, the most integrated blockchain, the chosen blockchain, Ripple and XRP. They don't, Swift does not own the patents. They're not going to beat them. They haven't come up with a better solution, and they won't. Now, I've heard this kind of FUD in the past. I mean, we just had the Chainlink FUD just 2 months ago. It was ridiculous. Chainlink's an information oracle. It does not do what Ripple does. It plays a different sport altogether, but they do work together. Information and money transfers. So I want you to just keep in mind that FUD will come our way. You have to make up your own mind, because they're fighting for your dollars. They're fighting for your frame of mind. So you have to know the past. You have to know the history. So I'm going to show you a video that shares that history. All right? Because I know the history. So for me, it's easy. I see it. I can dismiss it. But I get it. A lot of you are new, or a lot of you haven't gone into that deep enough. You're just thinking, well, I put some money here. I better move it because, you know, before the value goes and I lose all my investment. Well, that's still your decision. I'm not here to make that for you, but I'm here to at least give you something to chew on, to make you, to make you look at it, and you can decide for yourself. Me, it slides off. I'm Teflon with this stuff, man. I don't deal with FUD. I don't like it because it's easy for me to disprove. And we will see more of it, especially in the months to come. You're going to see a lot more of it. So you better know what you're talking about, know what you hold, understand your investment. Only in that way can you be secure in your investment. Otherwise, FUD will come your way and they're going to shake you out. And that's exactly what they're trying to do. They're going to try to shake the heck out of us out because they don't want us in this space. They don't want banks replaced. And we're going to talk a little bit more about that battle with banks and crypto, but banks don't have the upper hand anymore. I think you're going to see that crystallize in the months to come. So in any case, I'm going to let you watch this with me. Take a look at it. Let me know what you think about it in the comments. Like, share, subscribe, and bookmark. Every second of this is going to be fascinating. Till next time, adios.
Rather than being an internet system. So we need that internet of value to be developed. And that's what we spend our time working on, is a replacement for SWIFT and correspondent banking. How do you get all of the payment providers, all of the wallets onto ILP, and then how to use XRP as on-demand liquidity so that all of these providers don't have to keep balances all over the world because the process is so inefficient. We think that's a winning kind of killer app. And then I think you last week talked about a Cambrian explosion. Yeah. Then you get that Cambrian explosion.
Well, I think what we're doing and executing on a day-by-day basis is in fact taking over SWIFT. In that, we've now signed up, well over 100 banks. Some of the largest SWIFT-enabled banks in the world are now using Ripple's technology. Just last week we saw a remittance company who's using Ripple's technology. They reduced the price per transaction to their consumers from $20 per transaction to $2 per transaction, and they saw an 800% increase in usage overnight. That's the type of dynamic that Swift isn't able to support that we're able to address right now. And that's something we saw just in the last couple of weeks. So we certainly want to see banks succeed in this new world order and take advantage of these technologies. To the extent we can work with Swift to do that, then that's great. The payments, you have north of $20 trillion going cross-border each year. It is fraught with error rates, and it's slow, it's expensive. For me, it's a classic Silicon Valley going up against the big behemoth Goliath, but it's so broken. When I go talk to banks, it's a beautiful thing for me because banks don't like Swift. They're frustrated with Swift. Their customers don't like Swift. And that's a great place to be when you're selling into that.
And Swift, it seems, has responded to what Ripple is doing. How does their new technology, the response that they've created, compare to what Ripple's doing?
So they changed they sort of pressed on their customers to credit payments more quickly, and they added an acknowledgement at the end of the payment. So it used to be fire and forget. Now they send a message back from the end when the payment's acknowledged, and that does address some of the pain points that people had. But I think there are a couple things it doesn't address. So one of them is it doesn't enable settlement at the time of payment. So if you think that that's an important thing, it kind of attacks our sort of submarine strategy of like, we'll give you a better payment system, and it can settle at the time of payment. But even if you don't care about that, it's still a better payment system. So obviously the bidirectional messaging and everything, it's still a better payment system. But like if you can take away the major pain points, maybe that sort of attacks our strategy of saying we're going to take away your major pain points. So we'll be like, well, we can take away some of those pain points too. But it doesn't fix the fundamental problem. It's kind of like, you know, like if a music company tried to combat the iPod by like dropping the price of CDs or making them hold more data or something. The fundamental problem is the settlement.
What does that mean? I was talking to the CEO of one of the largest banks in Canada, and they were exiting their correspondent relationship in Brazil. It's expensive for them to hold Brazilian reals, and they're like, look, we don't have enough demand, so now we're going to use a correspondent bank. Now, if they could use XRapid into Brazil, they don't have to have the pre-funded money, they don't have the expense, and they can still solve their customers' problem that need to do business in Brazil. So I think these are all examples of it is a journey. I think that it is nascent. I will also say that I'm going to send a case of champagne to David Marcus, the guy who runs the Libra. The reason is this week will probably be the best week of signed contracts at Ripple ever.
Right. Wow.
It has been a massive call to action because, again, Facebook kind of came out and said, we don't need Western Union anymore.
Right.
Well, if you're a bank, if you're Western Union, you kind of, that's interesting. And I think the banks realize that if Facebook is going to be a competitor in this space, they can't depend upon a technology like SWIFT to compete in the marketplace. Correspondent banking, it was built decades ago. It hasn't really evolved. It's based upon SWIFT messaging between correspondent banks. The cost of supporting that infrastructure, frankly, has gone up. One of the things that changed after the financial crisis of 2009, 2010, it used to be if the Bank of Dan and the Bank of Brad wanted to do cross-border transactions, we'd have what's called Nostro Vostro accounts. It used to be that when I put cash at the Bank of Dan, that counted positively towards my capital ratio. After that financial crisis, we decided that trusting other deposits at other banks may not be as trustworthy as we thought. And so now it doesn't count. And so banks have contracted. The correspondent banking relationships have gone down by 50% in the last 15 years. Yet global cross-border transactions continue to grow. So our view is, look, these are technologies from decades ago. We can upgrade them with today's technology, with internet-based technologies, and make this real-time transactions. You do a SWIFT transaction, there's banks saying, there's a market maker saying, I'll lock in that rate. I'll take the volatility risk for the next 2 or 3 days. With XRP, you don't have to do that because it settles so quickly.
Value exchange, and that's really the mission that we're trying to accomplish. What does that mean for financial institutions? Well, it means that banks remain the custodians, but they can also correspond with each other directly, and they can use this real-time settlement system without putting up capital on both sides, and with getting maximum competition for that exchange of value. It's a fundamental structural change in correspondent banking. The networks, whether that be SWIFT or Visa or Earthport, they can also use those same benefits for their customers. And then for regulators, we actually think this is also a big step forward because you get so much more transparency. It's so much easier to track sort of degrees of separation tools in real time. We think it actually shortens the time it takes to catch the bad guys.